Welcome back, everybody. Today we're doing something a little different. We're still doing a deep dive, but this time it's into the world of Warren Buffett.
Yeah.
But we're not just talking stocks and investments, the
Right.
balance sheets and all that.
The numbers.
We're going to explore the man himself. Like what makes Warren tick,
Yeah.
how he thinks,
Exactly.
what we can learn from his, decades of success.
It's like peeling back the layers of an onion, right?
Oh.
You can't really understand his success without understanding the foundation.
The foundation of his thinking.
Yeah, and how he's adapted and changed over time.
I love that analogy.
Yeah,
And thankfully, we have a lot of material to work with here.
we do.
We've got his letters to shareholders,
Right.
analyses of his investment decisions, tons of those.
Yeah, tons of great books out there.
Insights from people who know him best.
People who worked with him personally, yeah.
Really exciting stuff.
Yeah.
So where do we start with this? I mean, this guy's investment philosophy, it's not like he just pulled it out of thin air. Right?
Not at all.
It's got to be based on something.
Yeah, it's a synthesis of ideas from some of the greatest investors who came before him.
Okay, so who are these figures? Who shaped his thinking?
Well, you can't talk about Buffett without talking about Benjamin Graham.
The Jim Graham?
His mentor, right, the father of value investing.
Okay.
And Graham's emphasis on intrinsic value.
Intrinsic value.
Yeah, a company's true worth beyond just the, fluctuating stock price
Okay.
that formed the bedrock of Warren's early years.
So it's like,
Yeah.
is his foundation.
Yeah, learning to build a house from the ground up.
Yeah.
You need that strong foundation. And for Buffett, that foundation was Graham's value investing.
Exactly. And then from that foundation, you build up, right?
Yeah.
So then there's the idea of buying with a margin of safety.
Margin of safety, what is that?
That's essentially buying a stock at a price that's significantly lower than its intrinsic value. So it's like having a built-in cushion, to protect yourself just in case.
Just in case your calculations are off, or
Yeah.
or the market takes some crazy turn that you
Right.
didn't see coming.
Yeah, you never know.
You never know.
That makes a lot of sense. So it's not just about finding good company. It's about buying it at the right price.
Exactly. At the right price.
And that's where you need discipline
discipline.
and patience.
Patience, yes. Big time.
This is what I'm hearing.
Yeah.
I mean, he's known for this.
Yeah.
He's willing to wait for the right opportunity, even if it means sitting on the sidelines for years.
Exactly. Yeah.
But it's got to be more than just Graham, right?
Yeah, he didn't just stop with Graham. He evolved. He adapted. And I think that's one of the things that makes him so remarkable.
I love that. So who else was in the mix? Who else influenced him?
So enter Philip Fisher,
Okay.
another investing legend, right?
Okay.
And Fisher's philosophy contrasted with Graham's in a couple key ways.
Okay, this is getting interesting.
Yeah, so Fisher focused on high-quality businesses.
High quality.
Yeah, companies with long-term growth potential.
Okay.
Yeah, even if the stock price seemed high at first glance.
It's interesting. So it's not just about finding these undervalued companies. It's also about finding companies with a great track record
Exactly.
and a really bright future.
Exactly, a great future and the staying power, right?
Just staying power.
And Fisher really emphasized understanding the businesses that you invest in, like deeply understanding them.
Interesting.
Yeah, he believed in doing your homework, talking to management, really getting a feel for the company's culture and competitive landscape.
So it's more than just the numbers.
Yes, way more.
It's really understanding the business almost like,
Qualitatively?
Yeah.
Yeah.
and this is a turning point for Buffett, right?
Absolutely. This is where he starts to move away from that pure quantitative approach,
Right.
toward this more holistic view of investing.
It's almost like he's adding another tool to his toolbox, right?
Hold.
He starts with Graham's hammer for finding the undervalued
Yeah.
companies. And then he adds Fisher's magnifying glass to really examine the business's long-term potential.
That's a great analogy. And, as Buffett starts to incorporate these ideas from Fisher,
Yeah.
he also starts to develop this more concentrated investment approach.
Okay, so what does that mean?
So this brings us to the concept of focus investing,
Focus investing.
which is basically the idea of owning a smaller number of truly exceptional companies,
The smaller number.
rather than spreading your investments really thin across just tons of average ones.
I mean, that sounds counterintuitive,
It does.
right? Because I feel like I'm always being told to diversify, to manage my risk.
Yeah, that's the conventional wisdom.
Right.
And diversification is important to a degree.
Okay.
But Buffett and many other people who subscribe to this idea of focus investing,
Yeah.
they argue that spreading yourself too thin can actually limit your returns.
Really?
Yeah, think about it. You have a deep understanding of a handful of really outstanding businesses.
Yeah.
You're more likely to make better decisions about those and to really capitalize on their growth.
So instead of putting your eggs in a bunch of different baskets,
Yeah.
you're putting them in a few really carefully chosen baskets
Exactly.
that you know are super strong.
And you know those baskets really well.
Doug?
Like you can see the weave. You can see how strong they are.
Okay, I like that.
Mm-hmm.
So it's about quality over quantity.
Quality over quantity, exactly.
And so it's less risky
Potentially, yes.
to focus on a few great companies rather than spreading yourself too thin.
Potentially less risky, but it's not just about picking the right companies. It's about having the temperament to stick with them through the ups and the downs.
Oh, that's hard.
It is hard, and this is where Buffett's legendary patience really shines through.
He's got that long-term view.
He does, yeah. Famously, he said that his favorite holding period is forever.
Right. I've heard that.
He doesn't care about the little, ups and downs every day.
He's got his eye on the prize.
He's betting on the long-term growth of those businesses he owns and that long-term outlook.
The long game.
It's a crucial element of his success.
But it takes a certain kind of person to do that.
It does.
To really tune out all that noise.
Yeah, it's all the noise.
All that media hype and everything.
He's got that ability to zoom out.
And see the big picture.
See the big picture.
Right.
And not be swayed by, fear and greed.
He's not an emotional investor.
Yeah. He's very rational.
That's interesting. So we've talked about, the influences on his thinking.
Yeah.
We've talked about, that long-term outlook.
Yeah.
But there's got to be more to it, right?
Yeah.
Like, what else makes him tick? What are these tenets, I guess they call them, that he uses to actually analyze a business?
Right. So that's where things get really interesting because Buffett has developed this incredibly robust framework for evaluating potential investments. He doesn't just look at the numbers. He considers the business itself, the management team, the financials, and the market context. It's a very holistic picture.
It's a very thorough approach.
Yeah, it is.
Okay, so let's unpack this framework a little bit.
Yeah, let's dive in.
I'm excited.
Me too.
Because I already feel like what we're talking about applies not just to investing, but to, like, all kinds of decision-making.
Exactly.
It's almost like
a life philosophy.
Yeah. And I think that's what's so fascinating about Buffett. We've only scratched the surface, but I feel like there's so much more to discover.
Yeah, there's a lot more.
I can't wait to dig in.
Let's do it. All right, so you mentioned this framework.
Yeah, this framework, these tenets.
These tenets, let's dive into that.
Yeah, let's break it down. So we've got these 4 key tenets.
4 key tenets: business, management, financial, and market.
Okay, let's start with business.
Business tenets.
What does Buffett look for in the business itself?
First and foremost, he has to understand it.
Understand it.
I mean, it sounds kind of obvious.
Yeah.
But you'd be surprised how many people just kind of jump into things without truly grasping
the underlying dynamics.
The dynamics, right. He famously said, "I don't look to jump over 7-foot bars. I look around for 1-foot bars that I can step over."
Right. He doesn't want to make it harder than it needs to be.
Exactly. He wants businesses that are, simple and predictable.
Okay, so no betting on the next,
Yeah.
gadget or something crazy.
The flying car? No.
Right, exactly.
So simple and predictable, not overly complex and convoluted.
Not like that.
And then what?
He also wants a business with a consistent operating history.
So it's not like a turnaround story.
No turnaround story.
Or a company that's, really volatile.
He wants steady performers, companies that have proven themselves over time.
Okay, so reliability and consistency seem to be key themes here.
Reliability, consistency, absolutely.
Got it. What else?
And then finally, he looks for businesses with favorable long-term prospects.
Okay, so he's not looking to make a quick buck.
No quick bucks here. He wants something that's going to grow over time.
Yeah, compound its value over decades to come.
Like planting a tree. You're not expecting to harvest fruit the next day.
Exactly.
You nurture it, you give it time to grow.
And eventually reap the rewards.
I like that.
So those are the business tenets. Now let's move on to the management tenets.
Okay.
This is where Buffett really places a huge emphasis on the quality of the people.
The people.
The people running the businesses he invests in.
So it's not just about the product or service.
It's not just about the widget, no.
It's about the people behind it.
The people matter even more than the product sometimes.
Okay, that's interesting. So what kind of managers does he look for?
He wants managers who are rational, candid with shareholders,
Okay.
and resistant to that institutional imperative we talked about earlier.
So they have to be smart, honest, and independent thinkers.
Independent, exactly.
Okay, so they're not just following the crowd.
No, he wants people who are thinking for themselves.
Making their own decisions.
Yeah, he wants managers who think like owners.
Ooh, I like that.
Focused on creating shareholder value.
Yeah.
Not afraid to make tough decisions, even if they're unpopular.
Okay, so they're not just going with the flow.
No, they're making the hard calls.
They're leading.
Exactly. And perhaps most importantly, he wants managers who are honest and transparent with their shareholders.
Didn't he say something like, if they don't have integrity, don't even bother with the first two?
He did. Integrity is absolutely paramount to Buffett.
Okay, got it. Integrity first.
Integrity first.
Okay, so that's business and management.
Right. Now let's move on to the financial tenets.
Ooh, the numbers.
The numbers, yes. This is where it can get a bit more technical, but we'll keep it high level, don't worry.
High level.
So he's not as obsessed with earnings per share as many investors are.
Okay, that's interesting.
Yeah, he focuses on return on equity.
Return on equity, what is that?
So it's a measure of how effectively a company is using its shareholders' money to generate profits.
So it's all about efficiency.
Efficiency, yeah, making the most of what you have.
Okay, like a farmer making the most of their land to produce crops.
Exactly.
Got it. So return on equity, what else?
He also developed this concept called owner earnings.
Owner earnings?
Which is basically a way to get a truer picture of a company's cash flow.
Okay. So not just profit on paper?
No, not just paper profit.
But actual cash coming in.
Cash is king, as they say.
Right. Makes sense. Okay, so owner earnings, got it. What else?
He wants businesses with high profit margins.
High profit margins, so they're actually making money.
Yeah, they're making money. They're generating a healthy return on their sales.
Okay.
And another key financial tenet is what he calls the $1 premise.
The $1 premise. Okay, I like these names. They're very catchy.
Yeah, they stick in your head.
So what's the $1 premise?
Basically, for every dollar a company retains in earnings.
Retains, okay.
He wants to see at least $1 added to its market value.
So every dollar they keep should translate into at least $1 of growth.
Exactly.
So it's not just about holding onto the money, it's about investing it wisely.
Exactly. It's about ensuring that they're creating value for their shareholders.
Creating value, got it.
Okay.
So that was a whirlwind tour of the financial tenets.
A whirlwind tour.
Now bring on the market tenets.
Right, the market tenets. So this is where he considers the price of a business in relation to its intrinsic value.
Okay. So all the other tenets were about understanding the business itself.
Understanding the business.
Now this is about figuring out if it's a good deal.
Exactly.
Okay.
He's only interested in buying businesses when they're trading at a significant discount to his estimate of what they're really worth.
So he's like a bargain hunter.
He is a bargain hunter.
Waiting for the perfect sale.
Exactly. And he's incredibly disciplined about it.
Okay. So he doesn't get swayed by the hype.
No.
Or the ups and downs of the market.
No, he's focused on finding those rare moments when a great business is available at a bargain price.
So it's like finding a diamond in the rough.
That's a great analogy.
A hidden gem.
A hidden gem, exactly. And this brings us to another one of Buffett's brilliant concepts, Mr. Market.
Mr. Market. I've heard of this guy.
This is one of Ben Graham's most brilliant analogies.
Okay.
And it perfectly illustrates how Buffett approaches market fluctuations.
I'm intrigued. Tell me more about Mr. Market.
Okay, so imagine Mr. Market as this kind of, fickle character.
Okay.
Who shows up at your door every day.
Okay.
Offering to buy or sell stocks at just wildly varying prices.
Good.
Sometimes he's euphoric.
Oh, I've met this guy.
You know him.
Yeah.
Other times he's totally depressed.
I've seen him both ways.
Yeah, you've seen all sides of him.
Yeah.
But the key is to not let his mood swings dictate your decisions.
Don't let him get in your head.
Don't let him get in your head.
You have to stay rational.
Stay rational.
I'm just getting all emotional.
Exactly. You have to remember that Mr. Market is there to serve you, not the other way around.
Okay, he's there to provide you with opportunities.
Exactly.
Not to tell you what to do.
Not to boss you around, yeah.
Okay, so when Mr. Market gets, overly enthusiastic
yes,
and bids up prices, far beyond what the company is actually worth.
Beyond intrinsic value.
That's a chance to sell, right?
That's a chance to sell.
And when he's all gloomy.
Yeah.
And he's offering to buy at, bargain basement prices.
Fire sale prices.
That's a chance to buy.
That's a chance to buy.
Wow. So it's like having this, insider tip?
It is, in a way. But it requires discipline, right?
Right.
Emotional detachment to resist getting swept up in Mr. Market's manic swings.
He's a tricky one.
That's tricky.
But Buffett has mastered this.
He's mastered it.
So he's not just a brilliant investor, he's also a master psychologist.
Absolutely.
Because he understands human behavior.
Yes.
Not just in the market, but like in general.
In all aspects of life, yeah.
It's fascinating.
Yeah.
So we've covered the 4 tenets. We've talked about, this Mr. Market. We've talked about, this long-term outlook.
The long game.
Is there anything we've missed? What else is there to learn about Buffett?
There's always more to learn about Buffett.
Wow, it's amazing what we've uncovered about Warren Buffett already.
Yeah, it's incredible how much he's willing to share.
Right. Like he's not just holding on to these secrets to success.
No, he's like giving away the blueprint.
Exactly. And yet, so few people can actually replicate it.
Right. It makes you wonder, what sets him apart?
What is it? Is it just smarts? Is it luck? I mean, there's got to be something more to it.
I think it's a combination of things, Part of it is definitely his temperament.
That patience, that discipline.
Exactly. But another key element, I think, is his ability to identify companies with a durable competitive advantage.
Okay, what's that? What are we talking about here?
He calls it a moat.
Ah, the moat.
Yeah.
One of his famous analogies.
One of his favorites.
Yeah. So how does he define a moat?
Imagine, like, a medieval castle, right?
Yeah.
Surrounded by this deep, wide moat.
Okay, I'm picturing it.
Makes it incredibly difficult for enemies to attack.
Oh.
A business moat is similar. It's a protective barrier that makes it hard for competitors to steal market share.
And eat into their profits.
Exactly.
So what kind of things create a moat for a business?
Well, it could be a strong brand.
Like Coca-Cola.
Or a unique cost advantage like Geico.
Okay.
Yeah, it could be a network effect where the value of the product or service increases as more people use it.
Ah, so something like American Express, maybe.
Exactly. Or it could be a combination of factors.
And when you think about it, all those companies, Coca-Cola, Geico, American Express,
Right.
they've been around for decades.
Decades.
They're still going strong.
Yeah, and they're not easily disrupted.
Yeah, it's not like they're going anywhere anytime soon.
No, they're built to last. And that's what Buffett's looking for.
Businesses that can withstand the test of time.
Exactly. He's willing to pay a premium for companies with strong moats.
So even if the stock price seems high.
Yeah, because he knows in the long run.
It's worth it.
It's worth it, yeah.
Because that moat protects their profits.
Exactly. Exactly. But it all comes back to that idea of intrinsic value.
Right. Got to figure out if the price is justified.
Yeah, you got to do your homework.
Based on the strength of that moat.
Exactly.
This is so fascinating. It's like all these concepts, they all kind of weave together.
They do. They all fit together.
And it really paints a picture of his approach.
It does.
So we've talked about picking individual stocks.
Right.
But he's also aware of the limitations of stock picking.
He is.
He's famously said, diversification is protection against ignorance. It makes little sense if you know what you're doing.
Right. So for him, it's not about diversification. It's about really understanding the business.
But for the average investor who doesn't have, hours and hours to research companies.
Right. The average Joe.
What does he recommend?
He's a big proponent of low-cost index funds.
Okay, so what's that?
So basically putting your money in a basket of stocks that tracks the overall market.
So you're not trying to pick individual winners.
Exactly. You're just riding the wave of the market as a whole.
Okay, makes sense.
And he really believes in this. He's actually instructed his trustees to invest the majority of his wealth in index funds after he's gone.
Wow, so he really walks the walk.
He does. He puts his money where his mouth is.
So looking back at his journey, he started with Graham's value investing.
Yeah, that was his foundation.
Incorporated Fisher's focus on quality and growth.
Exactly.
And now he's bringing in these ideas from complex adaptive system.
It's truly remarkable how he's always learning and adapting.
Always evolving.
Yeah, and I think that's a huge key to his longevity and success.
Yeah, he's not afraid to change his mind.
No, he's constantly challenging his own assumptions.
That's a good lesson for all of us.
It is.
To never stop learning no matter how successful we become.
Right, there's always more to learn.
So to wrap things up, what are the biggest takeaways from this deep dive into Warren Buffett?
Oh, so many. But if I had to choose a few, I'd say focus on the long term. Be patient and disciplined. Be risk-averse. Learn from the best. And remember, investing is as much about understanding human nature as it is about understanding financial statements.
Wow, that's powerful stuff. It's not just about making money. It's about cultivating a certain way of thinking.
A certain mindset.
a certain approach to life. I
Exactly.
think that's why his wisdom resonates with so many people.
It does, even people who aren't interested in investing.
Right, because he offers these valuable insights into decision-making, risk management, human behavior.
It's all connected.
He's not just an investor, he's a philosopher.
I agree. And his story is really an inspiration.
It shows us that success is possible with hard work, integrity, and a commitment to learning.
Couldn't have said it better myself.
Well, thank you so much for taking us on this deep dive into the world of Warren Buffett.
It's been a pleasure.
It's been an incredible learning experience.
Yeah, for me too.
And hopefully it's inspired our listeners to keep learning,
Keep growing.
keep investing in themselves.
Excellent.
Until next time, everybody.